Hi, Gregory Clump here, Chief Economist for the Canadian Real Estate Association with CREA's revised forecast for home sales and average price for 2011 and 2012. After each quarter, CREA revises its forecast to take into account new housing market data and changes to the outlook for interest rates and the macroeconomy. Before I get into the revised forecast, let me just stress that the national forecast should not be interpreted as being for any particular local market, but rather the overall picture on a national level. With that important proviso out of the way, let's dive into CREA's newly revised national housing market forecast. Overall, sales activity and prices remained stronger than expected in the second quarter, and sales momentum was also better than expected heading into the third quarter. As a result, the 2011 forecast for national sales activity and average price has been raised slightly. National sales activity is forecast to reach 450,800 units in 2011, which is up by less than 1% from levels in 2010. That's a bit of an upgrade from CREA's previous forecast decline of about 1%. Erosion in affordability due to higher prices has prompted a small downward revision to the outlook for sales in 2012. National sales activity next year is forecast to inch lower by 0.7 of a percentage point to 447,700 units, which is roughly on par with its 10-year average. The national average home price is forecast to rise by 7.2% in 2011 to $363,500. That's an upgrade from CREA's previous forecast and reflects further strong price growth in Vancouver during the second quarter of 2011 and accelerating prices elsewhere, particularly Toronto. These two markets have an outsized influence on the national average due to their relatively high level of activity and average price. The national average home price is expected to moderate in the second half of 2011. In the first half of 2011, the national average home price was pushed upward by a surge in multi-million-dollar sales in selected areas of Greater Vancouver and by a higher than normal share of overall activity in more expensive markets. Elevated shares of provincial and national sales activity in Vancouver and Toronto are expected to return to more normal levels. A decline in their share of national activity will contribute to an anticipated moderation in average price in British Columbia, Ontario, and nationally. Some of the expected moderation in the national average price in the second half of 2011 is seasonal, with average price peaking in many local markets during the second quarter of any year. Moreover, the number of new listings is expected to increase and contribute to a more balanced resale housing market in most provinces. Accordingly, the national average price is forecast to stabilize in 2012, but at a slightly higher level than previously expected. I've repeatedly said that interest rates are expected to remain supportive for housing activity over 2011 and 2012 because they'll remain within short reach of current housing-friendly levels. Now, with financial market turbulence and headwinds facing economic growth prospects having increased, private sector economists are pushing out the date as to when the Bank of Canada will resume raising interest rates. They're also scaling back their expectations about the number of times the bank will raise interest rates before again moving to the sidelines. Combined with recent upbeat labor force trends, the Canadian real estate market is expected to remain relatively stable over the rest of this year and in 2012. I'll be back to report on sales activity over Canadian MLS systems for July 2011, so stay tuned.